In this video, I will walk you through 5 common mistakes people make when refinancing their home, and more importantly, how to avoid them so you can save money and make smart decisions. Let's jump right into it. Mistake number 1, only going to your bank. A lot of people just walk into their regular bank and assume they're getting the best deal. But banks only offer you their own product. They're not shopping around for you. For example, if you want a line of credit, some lenders don't offer lines of credits, but banks only offer you their own products. They don't offer you flexibility. Example, if you're not sure if you want a variable rate or a fixed rate and you want both, some lenders don't offer you like what's called like a multi-tier or a split mortgage, where you can have half your mortgage can be variable, the other half can be fixed if you want. So some lenders only offer you products that they have. So some banks don't give you the flexibility. For example, some clients would like to have a split mortgage, like basically like half their mortgage being a fixed, the other half being a variable, or a portion of it being a line of credit, a portion of it being a fixed rate, the rest being a variable rate. So some lenders don't offer what's called a multi-tier or a split mortgage. Instead of going to your bank, work with a mortgage broker. We have access to multiple lenders, can negotiate better rates, and options that are not offered at your bank, options that are tailored for your situation. Banks will offer you their best rate at that time. And then a mortgage broker doesn't care what their rate is. They're just gonna give you the best rate from the best lender at that time for you. How banks work, they have a profitability. So every month they have to hit a profitability calculator, or like every branch is responsible to have a profitability. So they have to sell a certain amount of line of credits or credit cards or open up bank accounts or life insurance and mortgages. Mortgages is a small portion of usually their numbers they have to hit. So once they hit their numbers, they don't really offer you the best rates anymore. Obviously you can try to negotiate it down, but they're just going to give you almost like the go away price. Mortgage brokers are not ran that way. Their profitability doesn't matter if the rate is higher. It matters how much you borrow. So they're always offering you the best rates possible for your situation. And that's why working with a mortgage broker is better than working with a bank to refinance your home. Mistake number 2, focusing only on the interest rate. It's easy to get caught up on chasing the lowest rate, but rate is just part of the story. There are hidden fees, prepayment penalties, and other fine print that can cost you more in the long run. If the mortgage broker gets you a lender that has 3 months interest or IRD, whichever is greater, almost all lenders have that. Mortgage brokers have lenders that have straightforward penalties. 3-month interest or interest rate differentials is the common two. But when you go to your bank, remember this. So when your bank gives you an offer, remember what they're offering on the documents. Example, let's say they say our rate is 4%, your rate is 3.5 because we're discounting it by 0.5 to get it at 3.5, and you're happy because you got a 3.5 rate. They're giving you the discount of 0.5. Well, you don't know this, but if you ever have to break the penalty, they want their promotion or their discount back in some cases. So if they give you that 0.5 and you break it, you owe them that discount plus the IRD, the interest rate differential plus, or you owe them that discount back plus the regular payment. The thing is, if you think you got a better rate at the bank and they use the word your discount, let's say the word discount is in your commitment. Example, you get a 0.5 discount off your 4% rate, which makes it 3.5, and you're very happy you got 3.5. If you ever break that mortgage, you will have the regular penalties of 3 months interest plus IRD, and in your documents will say any discounts that were given to you has to be paid back. So that 0.5 they gave you, it can run up your bill really fast. So you can have a much higher penalty than you expected because of that discount they gave you in the beginning. Because in the fine print or in the documents, which they should explain, that discount has to be paid back if you break the mortgage. If you keep it the whole term, maybe you don't have to pay it back, but just remember that. That is a very common thing that a lot of banks have, is a discounted rate. They'll just say, here's your 3.5, you think you got a rate of 3.5, but no, they gave you example of 4% minus 0.5. I'm saying 0.5, but a lot of times banks have a much higher discount to get you a regular rate and you owe it back. So just remember, watch out for the word discount on your document when you're signing papers at the bank. That's why it's good to go to a mortgage broker, because a mortgage broker gives you the sticker price. There is no discount to that rate. A mortgage broker helps you look at the total cost of borrowing. So just know exactly what you're signing up for. Just in case you're looking for a mortgage, reach out to us. Our contact information is below. I've been doing mortgages for over 2 decades, help over tens of thousands of clients. Please reach out if you need any help with your mortgage. Number 3, ignoring your penalty for breaking your current mortgage. If you refinance before your term ends, you might face a penalty, and it could be a big one. A broker can run the numbers for you, calculate the penalties, and help you figure out if the refinancing still makes sense financially. And in some cases, we can negotiate with your current lender when we do the refinance, discount your penalty. Mistake number 4, extending your amortization unnecessarily. Sure, lowering your monthly payment can be tempting, but stretching out your mortgage can cost you tens of thousands in extra interest over time. For example, you got 20 years left on your mortgage and you want to just extend it to 30 years. That 10 extra years of interest is going to cost you a lot more money. Plus, when you pass the 25-year mark and you go to the 30-year mark, a lot of lenders have a premium for that. A lot of them have an interest premium. They tag on a little bit of interest for you to go from 25 years to 30 years. A broker can help you structure your new mortgage to match your financial goals, whether that's staying on track or paying off your mortgage faster. Mistake number 5, not using refinancing strategically. Refinancing isn't just about getting the lower rate. It's a chance to unlock the equity you've built. So the cheapest money you can borrow in Canada is mortgage money. So if you're looking to invest, or you have to pay off some debts, or you are going to pay for your kids' education or help out a family member and you need to borrow money to do so, it is much cheaper for you to get mortgage money than, example, a secured or unsecured line of credit or credit cards or personal loans. In some cases, it's much lower than even car loans. So make sure that if you are going to unlock the equity of your home, then make sure it's going to the right place. Best way to invest is to use the money or the equity in your home, unlock that, and go buy more real estate or go buy more investments, safer investments, obviously, or investments that you understand. But yes, that is a good strategy. A broker will guide you on how to use your equity wisely, whether that's consolidating debt, investing, or making a smart home improvement that adds value. So there you have it, 5 refinancing mistakes you can now avoid. If you're thinking about refinancing or just a second opinion on your mortgage options, feel free to reach out. I'm happy to help you find the best solution for your goals. Thanks for watching. I'll see you next video.